Good morning, everyone. I'm delighted to welcome you all today. Today, we'll be exploring the fascinating world of the banking system in India. This is the first slide of our presentation, and I'm excited to take you through an overview of this vital sector. We'll look at how the banking system has evolved, its key components, and its impact on the economy. So, let's get started and dive into the world of Indian banking. Welcome to our discussion on India's banking system. As many of you know, the banking system is a crucial part of our country's economy. It acts as the backbone that helps move money efficiently between those who save and those who invest. Think of it as the invisible infrastructure that supports economic growth. Banking isn't just about big financial transactions. It's also about making our everyday lives easier. Whether we're depositing money, paying bills, or transferring funds, banking services are designed to be convenient and accessible. This ease of transaction plays a vital role in keeping our economy running smoothly. Throughout this presentation, we'll see how the banking system impacts various aspects of our economy and daily routines. It's not just about money. It's about creating opportunities, supporting businesses, and improving financial inclusion. So, understanding its importance helps us appreciate how integral banking is to India's progress. Let's take a moment to look at the history behind this topic. Understanding the background helps us see how things have evolved over time. Throughout history, there have been key moments and developments that have shaped the current landscape. These milestones show us how ideas and practices have progressed, leading us to today's state. Recognizing this history is important because it provides context and shows the foundation upon which current innovations are built. As we move forward in this presentation, keep in mind how these historical points connect to the overall theme of growth, adaptation, and future potential. The first Bank of India was the Bank of Hindustan, which was established way back in 1770. This was a significant milestone because it marked the beginning of formal banking in the country. At that time, the bank was located in Calcutta, which was the Indian capital then. It's interesting to think about how early banking institutions like this laid the foundation for what would become a vast and complex banking system in India. During the pre-independence period, the banking landscape was quite vibrant, with over 600 banks registered across the country. However, despite this large number, only a few of these banks managed to survive the test of time. Many faced challenges such as political upheavals, economic fluctuations, and operational difficulties. This resilience of a select few highlights the importance of stability and adaptability in banking. Connecting this to our overall theme, understanding the early beginnings and the survival of these banks helps us appreciate how the Indian banking system has evolved over the centuries, shaped by history, resilience, and the need for a robust financial infrastructure. During the period of British rule in India, a significant development was the establishment of some of the first banks in the region. The East India Company, which was the dominant commercial and political entity at that time, took the initiative to set up three key banks. The first was the Bank of Bengal, established in 1809, which played a crucial role in facilitating trade and financial transactions in eastern India. Next, we have the Bank of Bombay, founded in 1840, which served the western regions and helped promote regional commerce. Finally, the Bank of Madras was established in 1843, supporting the financial needs of southern India. These banks were important because they laid the groundwork for modern banking in India, creating a financial infrastructure that supported both trade and economic growth. Connecting this to the overall theme, these early banks highlight how colonial policies and economic interests shaped the development of banking institutions in India, which would later evolve into the banking system we see today. Now, let's take a look at some of the key banks that emerged after independence. These banks played a crucial role in shaping the banking landscape in India. We have the Bank of Maharashtra, which was established to promote agricultural and rural development. Then there's the Central Bank of India, one of the oldest, set up to serve the needs of small industries and agriculture. Dena Bank and Indian Overseas Bank are also significant, with Indian Overseas Bank focusing on international banking services. Indian Bank, Syndicate Bank, Union Bank of India, and United Bank all expanded their reach across various regions. UCO Bank and Andhra Bank contributed notably to regional banking, especially in rural areas. Corporation Bank and New Bank of India, later merged, served diverse segments. Oriental Bank of Commerce, Punjab and Sind Bank, and ICICI Bank, which started as a development financial institution, transitioned into commercial banking. HDFC Bank and Axis Bank are more recent entrants, representing the modernization and privatization of the banking sector. Other important banks include Bank of Punjab, IndusInd Bank, Centurion Bank, IDBI Bank, and the State Bank of Patiala. Each of these institutions contributed uniquely to the growth of banking services post-independence, reflecting the evolving financial needs of the country. Together, they highlight the diverse and expanding banking sector that has supported India's economic development over the years. Let's talk about the nationalization of banks in India. The Reserve Bank of India, or RBI, took a significant step in 1949 by nationalizing the Reserve Bank itself, marking an important moment in banking history. Moving forward, a major milestone occurred in 1969 when 14 banks were nationalized. This move was driven by the government's aim to extend banking services to rural and underserved areas, ensuring that banking facilities reached the common people rather than remaining concentrated in urban centers. Some of the key banks that were nationalized include Allahabad Bank, Bank of Baroda, and Bank of Maharashtra. Alongside these, banks like the Central Bank of India, Canara Bank, Dena Bank, Bank of India, Indian Overseas Bank, Indian Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank, and UCO Bank also came under government ownership. This move was crucial because it helped the government control credit flow, support economic development, and foster financial inclusion. It also marked a shift towards a more socially oriented banking system, aligning with the overall theme of making banking accessible to all sections of society. So, the nationalization of these banks was not just a regulatory change. It was a strategic step toward building a more inclusive and equitable financial system in India. Now, let's take a closer look at the subsidiaries of SBI. In 1959, 7 regional banks were nationalized and became subsidiaries of the State Bank of India. These subsidiaries played a crucial role in expanding banking services across different regions of the country. The first one is the State Bank of Patiala, which primarily served the northern part of India. Then there's the State Bank of Hyderabad, known for its strong presence in the southern states. Next, we have the State Bank of Bikaner and Jaipur, which catered to the western regions. Moving on, the State Bank of Mysore focused on the southern states as well. The State Bank of Travancore was another key subsidiary, serving the southern tip of India. We also have the State Bank of Saurashtra, which covered the western coastal areas. Lastly, the State Bank of Indore, which was significant in central India. These subsidiaries helped SBI to extend its reach and serve the banking needs of diverse regions, aligning perfectly with its overall mission of nationwide banking. In 1980, we see that another 6 banks were nationalized, continuing the government's efforts to expand its control over the banking sector. This time, the banks included Andhra Bank, which was known for its widespread presence in Andhra Pradesh, and Corporation Bank, a key player in the southern regions. The new Bank of India was also brought under government control, along with Oriental Bank of Commerce, which served many small businesses and retail customers. Punjab and Sind Bank, serving the northern states, and Vidya Bank, primarily operating in southern India, were also nationalized. This wave of nationalization highlights the government's focus on ensuring that banking services reach more people, especially in rural and underserved areas. It was part of the broader theme of using banking as a tool for social and economic development, aiming to make banking more inclusive and aligned with national priorities. These moves reinforce the idea that banks should serve the public interest, not just private profit. Now, moving on to the liberalization period that began in 1991 and continues till today, this was a significant phase for the banking sector. During this time, the Reserve Bank of India granted licenses to 10 private sector banks to establish themselves in the country. This move was part of a broader push towards liberalizing the economy and encouraging competition. Among these banks, some of the most notable include ICICI Bank, HDFC Bank, and Axis Bank, which have now become household names. Other banks that entered the scene include Global Trust Bank, Bank of Punjab, IndusInd Bank, Centurion Bank, IDBI Bank, Times Bank, and Development Credit Bank. The entry of these private sector banks marked a major shift from the earlier dominance of public sector banks, leading to increased competition, better services, and more innovative banking solutions for customers. This period has been crucial in transforming the banking landscape in India, aligning it more closely with global standards and practices. It's a testament to how liberalization has opened up the financial sector to new players, ultimately benefiting consumers and the economy as a whole. Thanks for watching, everyone. I really appreciate you taking the time to be here today. If you found this presentation helpful, please don't forget to subscribe to the channel and press the bell button so you never miss an update. That way, you'll stay connected and get notified about future content. Remember, the key takeaway from today is the importance of continuous learning and staying engaged in our field. Your support helps us bring more valuable insights your way. Thanks again for your attention, and I look forward to seeing you in the next one.